Retailers must end consumer addiction to discounts. Let's just go over this. Enough is enough. Retail stocks took a hit Thursday as the holiday picture came more into focus, with signs increasingly pointing toward a lackluster season of deep discounts and low traffic. Although experts said 2014 should offer some relief to consumers' pocketbooks as the broader economy continues to strengthen, retailers' big challenge will be to find a way to attract customers without giving away the store, as many did this holiday. And then it goes on with some of these companies. Let's just look at some of them right now. Retailer Gap reported same-store sales in the key November-December month rose 1%, but predicted its full earnings would come in near the high end of its previously announced range of 257 to 265 per share. That would miss analysts' expectations. Also on Thursdays after the market closed, Abercrombie and Fitch, they saw their shares jump up. And then it goes on with some of these other stores. Among them were teen retailers Zumaze's, however you pronounce that, and American Eagle, Discounter Family Dollar, and Victoria's Secret parent company L Brand. Of the stores that projected their earnings lower, the majority mentioned margin pressure, which didn't come as a shock following a season that included store-wide discounts of 50%, said Ken Perkins, president of Retail Metrics. Although, I'm going to go down to the other paragraph. Although experts said the economy is expected to improve next year, Perkins said he doesn't see things picking up so rapidly and that retailers will be able to get rid of discounts altogether. But they can trim back on these offerings by providing some sort of value-added entertainment or making the process of shopping both online and in store more seamless. So basically, we see a lot of these firms right now, they haven't done so well the first quarter or fourth quarter of 2013. I mean, sure, you've had Macy's. Macy's had the stock price go up today. You had, in addition, one other stock that I can't think of. I think I read it off earlier. Let's just go to it. I think it must have been Abercrombie. Yeah, Abercrombie went up. Macy's and Abercrombie went up today. But then you had some horrible earnings out today. JCPenney did not perform well. You had Bed Bath and Beyond did not do well. You had Family Dollar. I don't believe they had a good day in the stock market. And then there was Sears. Let's just look at Sears. Even though Sears is not a retail outlet, it still has to deal with the consumer. Okay, now let's go to the businessinsider.com. Sears crashing after gigantic loss. Sears Holding is down 15% after hours after the company warned of Q4 losses. It's like maybe 13% last time I saw in Google Finance. But going on, the retailer sees a quarter four adjusted loss of $2.01 to $2.98. Analysts were looking for earnings of 0.26 per share. And then it just goes on and on and on. And they talked about in 2012 that Sears Holding would close 120 Sears and Kmart stores in an effort to get the company back on track. And basically, we've seen a bunch of companies, even though I've known for years that Sears wasn't the best company out there, you're seeing a lot of companies like the Bed Bath & Beyond, like I mentioned today, Sears, Family Dollar, they're not reporting great earnings right now. You're not seeing their stock price rise. In addition to that, you also have to look at the fact that they're offering discounts, right? They may be getting more revenue, but at the same time, it's cutting into their margin. So this is a problem that I was thinking about last December. I even did some videos about this, and I'll show you some other concerns that I had about retailers and the consumer, and it just seems that the stock market, in my mind, I mean, don't quote me on this, always do your own due diligence and talk to your financial advisor if you're going to make any decisions. That's all I'm going to say. I mean, I'm not saying that we've gotten a top in the stock market. It just seems out of whack right now when you see the consumer not as strong and you see a lot of these retailers not beating earnings. I mean, this could just be affecting one sector. Who knows? Maybe technology performs everybody else, and as a result of that, the retailers won't matter. Okay, so I just have to throw that in there. Now I'm looking at the change in inventory numbers that I showed you last month. I That was just a pop-up that came up, but put that aside. So we see this change in private inventory numbers, and we look at the fact that inventory spike in 2013. That's why you had a great GDP number, or if you want to call it great, you had extraordinarily high GDP number in quarter 3 of 2013. And because of that, you have to look at one thing though. And you have to look at the inventory numbers before 2013, quarter 3. You didn't see that much of an inventory growth. I mean, you didn't see a spike like that. And because of that, what does that tell me? It tells me that you may see a lot of these firms that may have accumulated inventory because they believe that the economy is headed for a V-shaped recovery. And because of that, they're piling all of this inventory. But at the same time, if you do not meet expectations and you do not have a growing economy, guess what? They're going to have to liquidate this inventory, most likely at fire sale prices. And if they do that, that's going to hurt their margins. And you could see in the retailer sector, they've had to put discounts, and that's hurting their margins. I'm not saying that it's necessarily going to lead to the market going down. No. I'm just saying that this is unusual activity. Look at the last time where you saw like a huge spike in any sort of direction, right? Look at this, 1980s, right? Like looks like 82, 83, and after that you saw a V-shaped recovery after Reagan cut taxes. I don't I see something to the upside like that. That is unusual activity in my opinion. And we see the numbers from the retailers. Now, is it going to happen with a lot of these firms that have accumulated inventory that haven't been able to liquidate it? We don't know. We don't know what the earnings guidance is. Or, I mean, if you look at our earnings guidance, is this priced in? That's something that people may have to investigate. But these are my thoughts that, hey, guess what? You have a lot of businesses thinking green shoots, the economy is great, but at the same time, consumers don't seem to have the cash. And it's my opinion, the consumers are not dead, but they have cash flow problems. And if they have cash flow problems, how is this going to solve the inventory issue? That's what I'm thinking. I could be wrong, though. Just remember that. Another thing to point out, you have to look at the fact that you have Obamacare coming out. And because of Obamacare, you're going to see less discretionary income going to American citizens. And because of that, I just feel that's another headwind in our economy. And those are some things that I'm thinking about. Once again, talk to your financial advisor if you're going to make any investment decisions. But it's in my belief that the consumer has cash flow problems. And because of that, it's going to be a not difficult economy right now. It just seems that there's going to be a lot of volatility, in my opinion, in the stock market because of that. I think it's going down over the next few years, but hey, I could be wrong. Thanks for listening to me, guys. I'll talk to you another time.